Howdy, everybody. Welcome to Liberty Call. Today is Monday, November 11th, 2024. Hope you're having a fantastical day out there. Boy, as far as sports-wise, my teams played they played well for like half a game. Like my Cougars, the basketball team, was up most of the game on Auburn on Saturday night and gagged that away. And then last night, prime time, my Texans, right here, Texans, blew it. I mean, granted, the Lions are a really good team. I mean, and I had both running backs in my fantasy league, so I was going to win either way on from fantasy football. But I'd like to see my Texans. I mean, they played so good in the first half; they were killing it, and then donut in the second. Anyways, you didn't come here to hear me complain about my favorite sports teams. I mean, and baseball season's over, so I have definitely nothing to bitch about there yet. So, all right. Well, let's get into the markets in just a second. But first, if you could, give me some thumbs up, a like, share, subscribe, a follow, and press that notification bell. All righty, let's hop into the markets. Dow Jones was up 0.69%, 304 points, closed at 44,293. The S&P 500 was up 0.13%, 8 points, closed at 6,003. NASDAQ up 0.09, 16 points, closed at 19,303. The VIX was up 0.2% today. It's at 1497. Close that. Let's see here. The we already did the VIX. Canada was up 0.12, Brazil flat at 0, and Mexico down 0.62. All right. Western Europe, Germany was up 1.22%, the UK up 0.65%, France up 1.2%, the Netherlands up 0.47%, Spain up 0.89%, Italy up 1.56%, Switzerland up 1.01%, and Portugal up 0.51%. Russian exchange is still in the green today. The MOEX up 1.86%, the RTSI up 1.73%, and the overnights, the Nikkei in Japan was up 0.18%, Australia down 0.35%, New Zealand, when it closed on the 10th, was down 0.55%. In China, the Shanghai was up 0.51%, Shenzhen Component up 2.03%, China A50 down 0.52%, DJ Shanghai up 0.82%, Hang Seng down 1.45%, and the Taiwan weighted was down 1/10. All right, so that is the markets for today. Not too terrible. All righty, well, let's hop into our weekly economic update, and there it is. Make that a little bigger for you. All right, stocks surged higher last week, fueled by the Fed's rate cut decision and post-election enthusiasm as investors look to future policy impacts of a Republican-controlled Senate and executive branch. The House of Representatives remains undecided. It's still undecided as of a little while ago. They had the little graphic up on the Fox Business screen, and it looks like the conservatives are probably going to take the lead, simply just based, if everything came out 50-50 of the remaining, I don't know, it was like a dozen or so seats. Looks like the conservatives will come out on top. Let's see here. The S&P 500 index spiked 4.65%, while the NASDAQ gained 5.74%. Dow Jones Industrial Average rose 4.61%, and overseas markets were flat at down 0.02%. It was a shaky start to the week for stocks as investors anxiously awaited election results and the Fed's interest rate decision. Well, the Fed had telegraphed since summertime that they were going to drop rates, September, November, and December. So, if they didn't, it would have caused chaos in the markets. If they had had I could see them getting away with not lowering rates next month in December. They could say, well, we're just kind of wait and see. But after telegraphing for September and the November meeting, I don't see them. It would have caused a lot of shock waves through the markets. All right, where were we? On election day, stocks rallied broadly before polling places closed. After the election was called early the next morning, stocks opened higher and climbed throughout the trading session. The yield on the 10-year Treasury fell to 4.307%. Stocks opened higher Thursday, and the rally picked up momentum after the Federal Reserve approved its second consecutive interest rate cut. Economic news showed that a 2.2% rise in third quarter productivity helped support the move. Stocks finished the week with a number of records. The S&P 500 crossed the 6,000 mark. The Dow breached 44,000 for the first time on Friday, while the S&P and Dow closed slightly below those record levels. Each had their best week in a year. All righty. Fed cuts rates. As expected, the Federal Reserve cut interest rates by a quarter percentage point at its November meeting. However, Fed Chair Jerome Powell signaled some uncertainty about the pace of future rate cuts, which slightly unsettled the markets, citing a desire to steer between the risk of moving too quickly and perhaps undermining our progress on inflation, or moving too slowly and allowing the labor market to weaken too much. In quote, Powell said the Fed will continue to monitor the economy's progress. It's very nice of him to do that, especially since they created all these problems. Economic data this week, Tuesday, Fed officials Neil Kashkari and Patrick Harker are speaking. Wednesday, we have the CPI, and Fed officials Lori Logan, Alberto Musalem, and Jeffrey Schmidt speak. And the Treasury buyback announcement. Thursday is the Producer Price Index. Fed Chair Jerome Powell speaks, and weekly jobless claims. Friday is retail sales, industrial production, import and export prices, and business inventories. All right, so that's everything for the weekly update. Let's get into the market recap for today. Dow extends rally to fresh record high ahead of inflation and Fed speakers. The Dow surged to a new record high on Monday, fueled by optimism from last week's Federal Reserve rate cut and anticipation of upcoming inflation data and speeches from Fed officials. The Consumer Price Index, CPI data for October due this week, will be closely watched as it could influence future Fed rate cuts, following recent signals that the path of inflation will guide Fed policy decisions. U.S. inflation has shown signs of stickiness recently. It's been sticky. It's been sticky since they stopped raising rates last summer. Despite early declines amid ongoing economic strength and a resilient labor market. Markets are also looking for insights from Fed officials on the central bank's plans for further easing. Investor sentiment was further bolstered by Evercore ISI's prediction of continued strong gains, projecting the S&P 500 to reach 6,600 by mid-2025. They attribute this outlook to the so-called animal spirits following Donald Trump's election victory. I'm not sure what that means. I'll have to look it up. Let's do that right now. What does election spirits, let me copy that. Election spirits. Because I don't want to say something and then how Trump's tax cut, tariffs, animal spirits could shape S&P 500 earnings. What? Paywalled. Damn it. Anyways, we'll skip that. We'll get back to the broadcast. I just don't know what that means, and I'm curious. Which provided markets with one of the largest post-gain election gains in over a century. Analysts see this reaction as the start of a broader rally driven by confidence in growing growth-friendly policies from a second Trump administration. Let's stop here. The same problems that we had a month ago, 6 months ago, a year ago, 3 years ago, they're still there regardless of who's president. And while things were better during Trump's administration than they were during the last 4 years, granted, Trump started some of those problems with all the money printing and the stimulus in the summer of 20. So he's not getting off scot-free. I voted for the dumb idiot, but it's kind of like voting against, Satan or less Satan. So you got to kind of pick your poisons. All right. Financial stocks, including major banks like JP Morgan and Goldman Sachs, not Golden, rose on expectations of relaxed banking regulations under Trump. Tesla also extended gains on speculation of a favorable relationship between Elon Musk and Trump, which could benefit the EV company. Meanwhile, Bitcoin hit a new high above 84,000, driven by optimism over Trump's pro-crypto stance and his campaign pledge to make the U.S. a global crypto leader. This surge lifts shares of crypto-related firms such as Marathon Digital, Riot Platforms, and Coinbase, which contributed to the climb alongside Bitcoin's historic rally. Yeah, there was something that jumped out at me there. What was it? Oh, about the relaxed banking regulations. I mean, does the federal government really have any... do they have the jurisdiction to regulate financial firms? I mean, it's a serious question. I know that the FINRA and the SEC were set up, due to what happened. Well, FINRA, what used to be the National Association of Securities Dealers, but all those were set up, in the wake of, the 29 crash. But I mean, it seemed more like a knee-jerk reaction more than anything. And no one ever asked the question, does the federal government have the right to regulate or have the jurisdiction over the securities industry? I've never seen it in the Constitution. So anyways, all right, let's get to our last article here. It comes from our friends over at First Trust, Mr. Brian Westbury. The Monday Morning Outlook this week is titled The Fed's Challenge. See what he has to say. The Federal Reserve recently cut short-term interest rates by 0.25%, a move widely anticipated by the markets. The Fed's lack of opposition to market expectations for another cut in December suggests a likely repeat if economic conditions remain steady between now and then. Despite this easing, inflation remains a significant concern for the Fed as both consumer and core price indexes have shown only moderate cooling. The consumer price index increased 2.4% over the past year, down from 3.7% the year prior, while the personal consumption expenditures deflator rose by 2.1%, down from 3.4%. However, inflation has stalled above the Fed's 2% target, with the Atlanta Fed projections indicating a 2.7% rise for the CPI by November and 2.5% for PCE gains. So yeah, it's I know 2.4 seems like it's close to 2, but I mean, a few months back they were talking about, well, should we raise our goal to like 2.5 or 3? So hey, boom, we're back at our goal. Also at the same time, we've had no deflation anywhere across markets, regardless if it's consumer groceries or industrial goods or whatever it might be. Everything is basically 30, 40, 50, 100% more than it was in the summer of 2019. And, if you even mention deflation or deflating the economy to, economists, they lose their minds like the world's going to fall apart. So I think a lot of Americans would really appreciate lowering prices. I mean, I know how I would do it. I would peg the dollar to gold and oil, because those two things have been very stable over the last 15, 20 years. Outside of, a few little things, they've tracked fairly stable over the same period of time. Peg the dollar to, say, I don't know, $50 a barrel of oil, and peg the gold or whatever it's at right now. Say $2,600 an ounce, a dollar is worth X ounce of gold. So you do that, you will stop the inflation there. Well, and it'll also screw up the economy it'll screw up the current economy because we won't be able to, print money out of thin air, and you won't be able to just have, easy lending standards where you just hit a button at a bank and poof, there's some money, take it and go do something with it. So anyways, jumping back in, where were we? All right. A further challenge is the Fed's supercore inflation measure, excluding food, energy, goods, and housing, which remains elevated at 4.3% over the past year. This lingering inflation complicates the Fed's task, as public perception still associates normal inflation with prices returning to pre-COVID levels, which the Fed will not let that happen. Something unlikely given the COVID era federal spending and subsequent expansion of the money supply. Though M2 has moderated from its peak, a more substantial reduction would be required to bring prices close to pre-pandemic levels. While the Fed's goal of a 2% inflation rate remains difficult, it signals that prices will continue rising, just at a slower pace. Given the ongoing economic growth and persistent inflationary pressures, the Fed may reconsider its rate-cutting path in early 2025. Yeah, the election's over. Possibly pausing it to assess inflation trends. The Fed's inflation target remains elusive, meaning rate cuts could be paused if inflation doesn't reach 2% consistently. All right. Well, that's everything that I had to cover for today. Y'all feel smarter out there? I know I do. All right. Well, if anyone needs anything from me and you need to get your financial planning in order, go to DSAFinancialGroup.com. All your financial planning needs can be addressed there. Just go to the website. I'd be happy to help. You can book a meeting, read through all the stuff that I do for folks, or just, admire my picture of me and my dog. So anyways, all right. Well, hope everyone has a great night, and I'll talk to all y'all again next time. Adios.